We've seen quite a rally in oil over the past few sessions. Crude now close to $90 US in North America. Weak US dollar obviously helping. Let's get some trading ideas for commodities in the week ahead. We are joined by one of our favorites, Tracy Shuchart. She's CEO and Chief Energy and Materials Strategist at Hightower Resource Advisors. Tracy, it's great to see you.
Great to see you.
Just on your horizon now, commodity market movers, trading ahead of the OPEC meeting on December 4th is one hot topic. EU set to ban Russian oil, and also China now showing signs of easing up on the COVID policies.
Yes, absolutely. I mean, when we look forward to this December 4th, 5th, the OPEC meeting is on the 4th. There have been rumors that they're going to cut another 500,000 barrels per day.
Wow.
So we'll kind of have to see how that happens. That said, October still showed a shortfall of 3.31 million barrels as a total for the group of their quota. But traders are looking to see if they are going to cut more. And then, of course, we have the Russian oil embargo. Traders are looking to see really how that affects the diesel markets, because Europe gets a lot of diesel from Russia, and we already are having a diesel shortage problem here in the States as well as Europe. So that problem could be exacerbated.
That's interesting. The diesel situation is tough for truckers. It's adding to inflation in our economies, the high prices for transport fuel.
Yes, absolutely.
What about the impact of rates here, Tracy? I mean, obviously it's complicated, but what are the main themes that you're looking out for in the commodities markets as borrowing costs rise?
Right. And so really what we're seeing right now is it's becoming more and more difficult to finance clean energy projects, which has been the West's big push. Right? Mm-hmm. Since the first COP14 meeting, we're in 27 now, that was held at the end of 2008, the world enjoyed very low government lending rates. Europe had sub-zero rates, Japan had zero rates, US had very low rates, and most of the $4.4 trillion of assets that have been financed in the clean energy space, more than 3.6 trillion of that has flowed during very low interest rate periods from 2009 to 2021. So going forward, we're going to have, those projects may get more expensive, and thus obviously higher financing means higher costs, and higher costs for input metals and everything else that goes into that.
Are you bullish on oil broadly, Tracy? Do you see it getting above WTI, getting above $100 and staying there?
I think that it's very possible next year, depending on, obviously, there's a lot of factors in the oil market, but we are still set to see oil demand grow, and we still have no capex still for 7 years. So there's just not enough projects in line right now with growing demand. I mean, India just came out today and said they expect a threefold by 2040, threefold usage in oil and oil products. Wow. So that's, we're set to see a lot of growth in that area. And again, we just don't have the supply coming online that we need.
You have some other intriguing themes here for us, commodities to watch, including LNG. We keep hearing, well, Europe has largely filled up its gas storage hoppers, but you say there is a risk of a shortage of LNG.
Yes, I mean, going into, right now, they're 95% full, and that's great headed into winter, but you still need to keep refilling that. And you have to remember that in 2022, they still had 50% of that coming from Russia and, cheap natural gas piped in. And so right now, if we look out into 2023, we're going to have a problem. They just don't have the storage to store all that they need. They are building out storage, but they don't have the storage. And so in turn, I think that'll be very good for the U.S. LNG market, as well as we have a shortfall of vessels for secured LNG projects. So I think, you could look at tankers as well. The tanker market, the LNG tanker market, I think will be very strong. As I think we'll see shipping prices elevated in that area.
Just finally, Tracy, you're focusing on the mining explosives market. It's a huge cost for miners. What's going on there?
Yeah, absolutely. I mean, obviously, it's dependent on coal and metals mining growth, but we're going to need a lot of metals going into, this new green era. And I'm sure that we're going to see a lot of, when COP27 wraps up, I'm sure we're going to see a lot of new projects wanting to be underway. And so it's a very niche industry, obviously, but it's very overlooked. And they have a compound annual interest growth rate of 7% out to 2028 is what the market forecast is right now. And so I think it's definitely something that most people don't tend to look at, but I think there's growth opportunity in that sector.
The mining explosives market, yeah, that's interesting. I see Dyno Nobel say they are one of the leading suppliers of that blasting. We should get somebody on from the industry because it does spend an awful lot gets spent on explosives to open up the land.